Hello, everyone. This is my friend Doug. We met on Bigger Pockets a little bit ago, and he has a great book on private lending coming out. We connected talking about scaling real estate. Awesome. There's the book, The Mad Lender, right there. And we transitioned to conversations about private lending. I mentioned what I do with private lending, mostly on the whole life side. I play positive arbitrage using my policy with private lending, but there's also a lot of different great vehicles you can use with the process. Doug has this book that he just launched, and he really dives deep into the proper structure with the private lending process. So, Doug, please tell us a little bit about your background. I know you have very extensive experience coming from multiple different financial backgrounds, but I would love to learn a little bit more about how you got to where you're at right now and discussing the book in depth.
Yeah, I think we started the company Castle Rock Companies, Castle Rock Capital Management, Castle Rock Capital Funding, which is a licensed mortgage company. I came from an actual financial background, meaning banking background, lending. You hear sometimes they say investment bankers, which are really, the Wall Street guys that are raising capital. And then you have the bankers like me who are more credit oriented. So I actually have a formal credit background from three of the largest banks in the world, 35 years of lending, both on the residential and the commercial side of the ball. And we started this company back, I guess, during the last crash. We saw it coming, put together a little bit of money, and then started not only doing commercial bridge lending, which is somewhat the private lending that it's morphed into today, but also we started buying bad loans out of banks. Started with retail centers, hotels, and then we kind of went backwards. We went into residential later. And Castle Rock Capital Funding, which is probably the most forward-facing company we have, is an NMLS licensed mortgage company doing the traditional consumer stuff, but we also do SBA financing, and we do a lot of private lending. Some of it we hold, some of it we broker. I was asked, I guess you mentioned the book, and one of my friends heads up an IRA company that does, you transfer your IRAs into, this company, and then you can lend it, you can uh, invest in real estate and whatnot. But what he was seeing, and they can't give you advice, by the way, those custodians, they can only just make sure that everything's legal. They can't give
Yeah.
you the advice. So what he found was that they were cringing whenever they would see some of these novice lenders go and try to lend money. They, take a course over the weekend and think they know everything, and it's all centered around collateral, but it's not. It's a lot more complex, and that's why after doing a couple of the webinars, educational, we started what we call the Mad Lender, which is a consulting company that kind of dovetails with those 35 years of lending, where we actually act as a consultant for private lenders and note investors to help them with the underwriting. We're not educators. There's plenty of those guys out there. We actually focus primarily on the credit side of the decision-making process and the workout. So that's what we do.
Amazing. Can you tell us a little bit about private lending as a whole, because I didn't really understand private lending. I come from a more traditional financial background. I mentioned before, I was a former Army officer, I was a West Point guy,
Mhm.
and really just followed traditional paths for the longest time. So max my 401k, or TSP in the military, max my Roth, did things of that nature. And then I was saving up for rentals in a high yield savings account or bond. So I had no clue what private lending was, several years ago before I got into this. So when you're describing it to a new person who has, maybe went down traditional paths, how do you package the concept of private lending so people can understand it in an efficient manner?
Well, it's you're being the bank, basically. Where in the past you would go talk to the banker and say, "Hey, I need a loan of some sort, whether it's a car loan or a home loan." And of course, the types of loans we do are all real estate backed. We don't do loans on other assets. But if you're someone that say they're using one of your insurance products and they're transferring some wealth into that and they want to lend out of that as the bank, basically that's what you're doing. You become the lender. Many times, and I'll let you speak to this, but many times the IRA or the insurance policy that you offer owns maybe an LLC 100%, and that LLC becomes the lender. And somebody that's doing needs a short-term loan, you can make that loan to them. Usually it's backed, most of the private lending is backed by real estate. So
Yeah.
somebody, hey, I want to buy this property, but I just don't quite fit the bank, but I'm putting a lot of money down on it, and it's a make sense deal. For one reason or the bank can't do it. Maybe it's too small for the bank to do.
Mhm.
Then someone can, with a little bit of money in the bank, or I should say, in maybe a policy like you have, is
Sure.
able to lend that out and collect the interest just like the bank would, and earn that interest for their investment. So,
Yeah.
just at a 30,000 foot view, that's kind of what private lending is.
Yeah, I like that. I like that conceptualization. From a bird's eye view, it's just lending money to make money. And it's modeled after the process of a bank. So if you look at what a bank does,
Right.
they are in the business of lending money to make money. Let's say you deposit
Correct.
$1 million inside of a bank, they're going to give you less than 1%, and then they're going to loan that money out and return 10, 15, 20%. And they keep the split between those two numbers. That's just positive arbitrage. You can replicate that same process. Hypothetically, it doesn't matter where that capital comes from, but we're just playing positive arbitrage. But okay, cool. So we talked a little bit about private lending, and you have the I'm skimming through your book, and you have after each chapter the Dougie Downer section where you talk about where you talk
Yeah.
about the some of the risks that are inherent inside of the private lending community. Because, as with any investment, there is going to be risks. But I found personally, as I was increasing my financial literacy education, I found private lending is something you really have to pay attention to. So, talk to us a
Yes.
little bit more about the intention of the book, and then let's dive in and talk about some of those key points that you make throughout there.
The intention, honestly, was to scare the crap out of people. I hate to say that, but it,
Yeah.
it really was. It was what some of the folks that I was talking to. I'm going to give you an example. There's a woman. I'm in Tampa, Florida, by the way. That's where I'm based. And there was a woman in our community not too long ago that actually was a test subject for the book. So I sent this out to a few people to get some feedback, you included. And she came back to me. She says, "I wish I would have gotten this before," because one of her close friends decided they went to a local real estate event where a guru was, charging them money. He had no background in lending, by the way, but he was charging to teach private lending. And she paid the money, and she gave her money to a very inexperienced investor, and she lost the whole thing. And so it was more or less, not to say you shouldn't be a private lender, but if you are going to be a private lender, you need to understand what you're doing, have the team around you that understands what you're doing, whether it be a credit officer like us, your attorney, your CPA, folks like you, to be able to help, put that insurance wrapper together if you're going to be going that route. So it was more or less, it's very credit heavy. It's a very different book than what you might find if you go out and put private lending. Most of those books, and they're fine books, but they focus on how do you raise capital, how do you put a fund together, but they don't get into the nitty gritty. Part two of the book, for instance, talks about, and I lay out three C's of credit. Some people say five C's. I explain why I only use three in the book. But capacity, meaning the ability to repay. Character, that's kind of credit, meaning past predicts future. What has this person done in the past to make me believe that they're going to pay me back now? And then,
Yeah.
of course, the collateral, which is if everything goes sideways and the creek rises and the crops turn brown, what is your exit strategy off of the collateral? Which should not be your first strategy. That's what most people teach, is that
Mhm.
as long as you're covered by the collateral, that's your first out. Now, that's your last out. And so it covers that. You were talking about risk earlier, and there's a chapter in the book about, it's called Risk Defined, and it takes 13 different types of risk that you don't think about. And I'm going to give you one of them that kind of goes along with what you teach with your products, and that's the inflation risk and the purchasing power risk. Meaning, you said that, hey, I have $1 million, I'm going to stick it in a bank account earning 1%. Well,
Yeah.
inflation right now is 3 or 4%. It just depends on at what time they measure it. So let's say 3.5%. Well, if you're only making 1% in the bank, but a gallon of milk is going up 3.5% every year, then
Yep.
you're losing money. You're losing your purchasing power. That is a risk that you have
Yeah.
to
Absolutely.
manage. So in a nutshell, the book is really built to, I guess, impart, push people to really look at how they're lending their money, not just to say he's a good guy and here's the money and pray that it pays.
Yeah, an analogy that you really like, or that I really like when we're talking was, you know, a lot of people may give some pushback on the technical reads, but coming from my system engineer background, I really do like some of the more analytical heavy stuff. And you made this heart analogy, heart surgery analogy
Oh, the heart
before,
surgeon, yeah.
yeah, if we're gonna do open heart surgery, do something more complicated, just because we don't understand it in like 10 pages of reading, it's probably that's because you need to do more reading. So I like that you came with more of the technical heavy aspect of things because it is important. It's something that you really do need to dive into and understand all of those, the three C's like you mentioned.
Listen, I don't make very much on each book sale. I mean, it's a smidgen. I'm not going to make much on a book. It's really meant to educate. It's very helpful for me when I have a client that comes to us and says, "Hey, we need some help with our private lending. We really don't understand the underwriting process, and when we get into it, because they can't quite understand, it's too complex for me. I'm going to go somebody easier." And the pushback that I've gotten thus far on the book was you'll reach more people and you'll reach the masses if you dumb it down a little bit. And the analogy that I used, the heart surgeon, I think is true. If I'm trying to learn how to do open heart surgery and the book is too hard for me, write me something more simple so that I can go out and perform it, heart surgery tomorrow.
Yeah.
And if you think about it, you're lending your hard-earned money. You've worked your entire life. You've put it into a 401k plan, and you've rolled it into the IRA, or you've got extra money that you're going to roll into one of your insurance products that to do your infinite banking and all of that fun stuff that you do. You've worked really hard your entire life to do that. Why do you just want to put it on black eight on the roulette wheel? You really need to understand what you're doing. So no, I refuse to dumb it down. If it reaches
Yeah.
fewer people, then so be it. But it's really meant to be a manual, and it's thick. Here the book, it's a pretty thick read. It's almost like a miniature credit manual, so to speak, for folks that aren't credit people. And so, that was really the whole reason behind the book. And yeah, I'm not going to dumb it down for somebody just because it's too hard to. I just want to be an easy lender. He's a good guy. Give him the money. Well, kiss your money goodbye. There's actually a story in the book about that where I was
Like the
a
pastor guy,
commercial.
right?
What's that?
The pastor guy, when you're talking
No,
about the
not the
character.
pastor guy, but that is a good story.
Okay.
There is a story, and actually, I think it starts out the book where there was a board member at a bank that I used to work at. And the board members are really there to refer business. They're not there to because they know anything about banking. They're people that can drive business in the door to a community bank. So there was a great board member, nice guy that referred a lot of business over, but he had zero lending background whatsoever. And he had a buddy of his that wanted $1 million. I don't know why $1 million is the amount we're stuck on today, but it is. He
Yeah.
wanted $1 million. And I looked at the deal, and there's no way I was going to let the bank take that risk. It just made no sense whatsoever on the loan, and I knew that I was going to get pushed back. So I took it to the bank president. The bank president looked at it and said, I back you 110%. And of course, the board member went ballistic when I told him no, and I'm just going to give him the money myself. And he did. He pulled the money out. He had more than $1 million in the bank, pulled it out, gave it to him, lost every cent. So the problem is that I think people will gloss over what's important in private lending, and there is a risk to it. So it's just because you have collateral does not mean that it's a good loan. I'm going to give you an example. Let's say that in Texas is very different than Florida. Texas is what they call a deed theory state, which is covered very extensively in the book, meaning you sign a deed of trust and it's a non-judicial foreclosure process. It's a lot faster. Florida, New York, Illinois, some of these other states that are lien theory, you sign a mortgage and you have to go to court, you get on the docket, you have to get a judgment. So it might be 18 to 24 months or more before you can get that property back. And that's just dead money sitting there. If you lend that money out and all of a sudden they quit paying you, it may be a long time before you can actually exercise against that collateral. All the while, the collateral's deteriorating. They're dumping concrete down the pipes to sabotage it. They're ripping the copper out of the walls. So just because you have collateral doesn't mean that it's a good loan.
Yeah, nor does it mean just because someone may appear to have good character doesn't mean that the actual deal is going to be intact.
You're
And
going
that
back
ties
to the minister, aren't you?
Yeah, going back to the minister story too, because like maybe if you hear this concept for the first time, you're like, okay, I'm don't maybe understand the technical aspects of private lending, but I want to jump into this. I want to spin this up. And then, you go find a buddy, maybe they present really well, but you look at what's going on underneath the surface, and then it's a ticking time bomb. So tell us a little bit more about that because, ignorant
Yeah,
before, if I was someone listening to this, I'm like, okay, I see the value of private lending. Maybe this is something that I want to jump into. I'm just going to plug into my network, find someone that appears trustworthy, someone that I could trust, and then I'm going to be good to go, two thumbs up. But you stress time and time again that that is not the right picture. You have to look at things holistically. It is the discipline of the underwriting process that is going to drive success with private lending. So tell us a little bit more about that pastor story, and let's dive
sure.
deeper into that conversation.
It's funny you mentioned discipline. When the book went to edit, I was told that I used the word discipline too many times. I had to go back and scrub it a little bit, which is
Oh,
kind of funny.
really? That's
Use
funny.
like, what's a synonym for discipline? Get my thesaurus out.
Yeah.
Listen, I'm old. I get thesauruses still, but no, I was fresh out of college and I knew nothing. I grew up in a small farm town in Illinois. And my mom worked at a bank, but she wasn't a lender. It was a small town bank, and so I got my first job in St. Louis, and was just starting out, just taking small applications. And in walks a pastor, dressed very well. Every other word was "God bless you." And by the way, I'm a man of faith, so I'm not ripping on pastors or
Yeah.
people of religion. I am a man of faith myself. But what I discovered very quickly was that appearances can deceive greatly. And so this guy walked in. Every other word was "God bless you, God bless you, God bless you." And so I took the application, and uh, at the time, now this is 35 years ago, there was the old black CRT screens. You could actually hit a function key, and it would pop up their credit report. And the credit report, he had never paid a bill he'd ever had in his life. I mean, it was bad, and it wasn't just oh, I had a little hiccup. It was a pattern.
Yeah.
So I was confused by this. Here's this really, really nice religious man sitting in front of me, and his credit report is telling me something completely different about his character. So I excused myself. I went to the back room, and actually, I don't think I put this in the book, but there were two people in that room. There was my boss, and the regional manager was in auditing the office at the time, and they were in the office, and they pulled up the application. So what's the problem? Just decline the loan. I said, yeah, but he's a pastor. And there was a pregnant pause, and both of them busted up laughing. They said, go decline the loan, come back and talk to us. We'll explain how the world works. So I did. I declined the loan, and those God bless yous turned into something else you very, very quickly. And he
Oh,
stormed out
really?
of the office. Oh, yeah. He turned like on a dime and left.
Yeah.
So what I learned was, and I've seen this throughout my career, and I think credit people will back this up. There's a lot of true, wonderful men and women of God, or religious people that are truly faithful people. Then there are a lot of people that it does attract a segment of people that are trying to get rich quick off of little old ladies for they pass the collection plate, and we've
Yeah.
all seen those in the world, and there is a disproportionate number of those in the field. And I thought just because you profess to be somebody of character, that was enough. But I learned through the years that it's not. You really have to dig down under the onion and look below it. And that's why I preach. I wrote an entire chapter on character, which does include credit. Sorry for the long explanation, but that was the story, and it was a very big learning moment early in my career.
Yeah, and that's one of the reasons why we connected so well too. And that's the whole reason of like why I launched this channel, Generational Growth, is to really bring people trusted connections. Because, going back to that bird's eye view, if you look at the financial industry as a whole, and a subsect of that is the private lending industry, it's kind of gross. Like it's kind of gross. I personally think you should be able to go online and type in, self-directed IRA professional, whole life professional, private lending professional, and you should get more or less the same product, right? Of course, there's going to be variance. Someone may be a little bit better, people may be a little bit worse, but that's just not the reality that we live in, man. That's just not the reality. There are predators out there, and that sucks. And that is one of the main reasons why I launched this whole thing is to bring people trusted connections because it's hard to find. It really is hard to find
Yeah.
to find those people that could actually structure this in the right way. We talked about this before, but we talked I think it was a whole chapter that was ability, ability, ability. Your mentor mentioned this. It is the ability of the
Capacity.
person to pay you back, capacity to pay you back.
Mhm.
And you talked about collateral being the last piece. When I first learned about this, it was the reverse order. I learned about, that was the first thing you ask is what is this loan backed by? So can you dive a little bit more in depth on why you put that last? And let's dig into that a little bit more.
Well, I think there's more than one reason. Number one, and we touched upon it before, is if you have to go exercise against the collateral, um, not only is it a very distasteful process, you're going to throw grandma in the street.
Mhm.
You don't want to do that. There's human beings that are involved here. But also, dependent upon the jurisdiction you're in, I mentioned New York, you may never get through the court system up there.
Mm.
We won't even lend in New York personally. I lend
Really?
that. I've got some buddies. I've got some good friends that are lenders that really know the lay of the land up there, and I'll refer those deals. Hey, I want to buy something in New York. I'll refer it to some guys up there that I know that are really great and know the lay of the land. But if you're just basing your loan decision on collateral, it could take you forever and you could lose your shirt. And somebody
Yeah.
goes out and file bankruptcy and they kick the can down the road even more, or the property deteriorates, and
Mm.
there's several stories in the book about that. But I put capacity in front, and I learned that early in my career, meaning how is this person going to pay me back? I want them to pay me back. There's a lot of people that are loan to own. Matter of fact, there's a guy that's based here and he teaches, he's an educator for loan officers. He does the pre-licensing education, and I take all my continuing ed off of him, a guy named Jim Montram, and he tells stories about lenders that I'm in the loan to own business, and I totally agree with him on this. um, People that are doing that are trying to steal somebody's property. They get
Mm.
desperate, they've got some equity, they want to put it up. That's theft. That's all that is. And I just find it very distasteful. So what I talk about in the book is a primary, a secondary, and a tertiary third form of repayment. And you have to be able to identify those, meaning let's say it's a rental property that a customer's buying, and I want to back the
Mm.
rental property. The first form of repayment is, what's the cash flow going to look like off of this property? Is it enough to cover the debt structure? Okay, that's your
Mm.
primary. Your secondary form of payback might be the person's job that owns it, their assets. What other kinds of income and assets do they have to be able to take care of the obligation should the primary stumble? And then last, the tertiary is actually the collateral. So it shouldn't be first. You really need to say, if I'm going to lend this money, how am I going to get my money back? And is there a secondary fallback to that before I have to go after the collateral?
Yeah.
So that's why, and I will tell you, the gentleman who said that at the time, I don't think I understood it, and I was fresh out of college, like I said, but he said the three most important things, and I preached this to everyone I've ever trained in lending through banks and whatnot. The three most important things are ability, ability, and ability,
Yeah.
which is the first C of capacity. I'm not sure what order it's in the book. I don't think it's the first chapter that I cover the three C's, but it's the
Mm.
most important in my opinion.
Awesome. What else should investors be looking out for when they're getting into the private lending space? When they're looking about how to structure their notes in the correct way, what are some other key factors that they should be paying attention to make sure they don't fall into poor note structure or poor note structure?
Well, and I cover this a little bit in the book. I will tell you one thing that's a little bit off of that, but it applies to several things that people should pay attention to. I'm a big fan of using LinkedIn and resumes and backgrounds of the people you're working with.
Yeah.
Here again, let's go back to a heart surgeon. The heart surgeon walks into the room and says, "Hey, I'm going to be performing your surgery today. I'm so excited. This is my very first one." Is that the person you want cutting on you? You want somebody that's got some background. So if you're learning from somebody, go back and look at their background. And we
Mhm.
shared that there were some people that are out educating that have no business to be doing, no business doing it. And some of the educators that I know that are phenomenal that actually have been doing it a long time but did not come from that background are smart enough and they're savvy enough to bring in the people around them to be able to, so that they have the good team around them to be able to educate. So I think the
Yeah.
most important thing is to, before you really get in bed with somebody, go back and look at their background, LinkedIn, look at their resume, kind of check out, make sure that they are who they say they are, and do they have that background?
Mhm.
Or are they, hey, I was working at a coffee shop last week, and then all of a sudden I learned how to make millions in real estate.
Yeah.
There's a lot of that out there. And
Yeah.
so
And
I would say the really important thing is to make sure you've got the team around you and you're
yeah.
surrounding yourself with a knowledge base so that you don't fall flat on your face. It's like a high wire act, and you've got a safety net.
Yep. And we hit on this a little bit before, but just because you're getting ads from someone doesn't necessarily mean that they have the back end to actually, look at that note structure and make sure that you're protected. A lot of times when you see things online, those people may not even be 100% competent in what they're doing. They're just throwing, mad advertising dollars. So you're getting those ads and then you fall into the
Right.
trap and there's no underwriting underneath it once you shine the flashlight, on the monster under the blanket, if you will. But so make sure you're doing your own due diligence. Marketing is a beast, and people may just be throwing a lot of marketing dollars at there. So let's transition and talk about the privates are the right vehicles to conduct private lending in. An analogy that I really like is match your vehicle to the terrain that you're driving on. You want to take a
Yep.
Prius off-roading, right? If we're going off-roading, we probably want a truck. And I found like a lot of people they want to go down the path of increasing cash flow. They want to increase their passive income, but they're on not only are they on the wrong path, but they're also in the wrong vehicle as well too. So when you talk about people with private lending, what types of vehicles, what type of financial vehicles are being used, and what's the intention behind the private lending?
So if you're talking about vehicles that you're using, typically I see them form an LLC of some sort, and that LLC may not be owned by them. It might be owned by their IRA. It might be
Mhm.
owned by a product that you are offering.
Yep.
A good rule of thumb here, or a good thing to think about is, unless you're rolling money from a 401k before, you can only put so much into an IRA every year.
Yeah.
But if you have that money sitting aside and you want to pass it to your heirs in a tax-free manner and avoid probate, then a vehicle like the ones that you teach are fantastic. And correct me if I'm wrong, but can't one of those vehicles actually own an LLC 100% and go
Typically,
through
it's
that?
going
I
to
don't
be
know.
an owner or the just an individual is going to own the policy, but you could also have more advanced plans to where a business will hold policy and you can conduct the same thing. But kind of go off of what you said. Typically, where I see private lending being conducted is either a checkbook, self-directed IRA, or with a whole life
Yep,
policy. There's pros and
correct.
cons to each one. Like you said, of course, there's those limits that you have with your different government vehicles. And I don't think it's an either or. I think it's really a both and. And not every picture is going to be the same. Not every individual is going to be the same. You really have to look at what's going on deeper, what the deeper, where your allocations are, what your intention is, and what's your tax problem is looking at right now. Whole life may not be a good vehicle for you. I don't know. We have to have that conversation with the client and really peel back the layers on what's going on. But is that typically what you see too? Is either checkbook, self-directed IRAs, or just a regular self-directed IRA, or whole life policies? Are people doing other type of vehicles? I've also seen solo 401ks too. That's another vehicle I've
Yeah,
seen.
yeah. So I either what we mostly see are either individuals
Mhm.
or are there some sort of retirement plan, whether it be a checkbook IRA, which is simply an IRA that owns an LLC, and that LLC is what actually owns the asset.
Yeah, okay.
So,
Gotcha.
and so we see that a lot, or the solo 401k. What we don't see a lot of, and I think it's criminal, is the stuff that you offer, which is
Mhm.
the policies, and it's just because I don't think people understand them, and if they do, they're not the people that are trying to explain them don't do a good job of explaining how that works. And that's why I was excited to one of the reasons I was excited to be on this. You're a good guy. That's the other reason.
Yeah.
But I was
Yeah,
excited to be on this because I wanted to learn more about the vehicles that you offer. We don't see that a lot. I
yeah.
understand it, but I also know enough to stay in my lane. And
Mhm.
I'm a credit guy. private lending, mortgage, commercial lending. That's what we do.
Mhm.
It's funny, a little background point. I was the original relationship manager for Wachovia's private client group on the west coast of Florida. So we did a lot of work in financial planning. I was actually the point of contact, and we had a whole team around us of experts,
Mhm.
JDs and folks with all the licensing that they needed to be able to do financial planning for more affluent individuals and wealthy individuals. So but I learned there to stay in my lane and
Mhm.
get with people like you that really know their stuff and kind of explain it. But yeah, what we see most of the time are either individuals with a little bit of money they're wanting to lend out, or maybe
Mhm.
they're lending out of an IRA which they have rolled from another 401k, and they're trying to
Yep.
get maybe a little more control of the return, maybe something a little more stable. Slow and steady wins the race. I'm getting returns in the 10 to
Mhm.
12% versus I can hit 30 and then I could lose 30 the next year,
Exactly.
or I'm going to slap it in a CD and I'm not going to keep up with the purchasing power risk we talked about. So
Yeah.
I'm going to stay in my lane, and I'm going to let you explain more about the vehicles that you focus on with the insurance wrapper. I don't want to go too far into that because you're the expert, not me.
Yeah, absolutely. Let's dive into a little bit of the properly structured whole life policy and how you could use that as really just playing the private lending game. Like we talked about before, you're lending money to make money, just like a bank. That is what's going on from a bird's eye view. So you can lend money from your policy via a line of credit, and then you could use that capital to go buy more money. I pair that with private lending or with real estate. But here's the kicker when you're doing it from your whole life policy, if it's structured in the correct manner. So we have non-direct recognition loans. What that means is, let's say you had $100,000 in a policy and you take out 50K to go fund a down payment or jump into a private lending deal, you're still gaining interest and dividends tax-free at 100K. That's what a non-direct
Correct.
recognition loan is. So you're earning in two places. You're essentially duplicating those dollars. So you're earning inside the policy and then you're earning inside the deal too. And when you're inside of that deal, I mentioned I do real estate, but then you have all the different um, benefits from that deal too. So you have the cash flow, you have the tax benefits of real estate, you have the equity that you can build in. And when we're comparing, something like the stock market to this, people really tend to focus just on the rate of return. But what's missing in that rate of return calculation is all that opportunity cost, the opportunity cost that comes with the leverage and tax benefits. And, going back to that bird's eye view too, with the three main benefits that you have with this whole life policy is you have protection. You're applying leverage and you're backed with protection. That's the death benefit that is given upon the insured's death, but you also have that guaranteed rate of return. When you lend that money, you are always going to be making money via contract inside that policy. If we're lending, let's say from a 401k or a stock market based account and that asset crashes, we invade Iran next month, COVID 2.0 pops off, you could be in a very sketchy situation. So when I'm applying leverage, I like to apply leverage with a more stable, secure foundation. So that's the protection piece. And then the tax piece is the tax-free growth inside of there. So you are gaining tax-free dividends and cash value growth inside that policy the whole time. And when you compound that throughout a long period of time, that's when efficiency starts to really increase. And then the big piece that I really like to talk about is that leverage component. When you are leveraging money, your money remains intact and continues to grow tax-free. You are applying leverage using life insurance company money, debt to go buy more assets. And then focusing on what that debt is, well, it's very cost effective and it's flexible. Typically, the cost of capital with the policy is going to be about 1% to 2% less than the market. So HELOCs are generally about 1% to 2% more. These whole life policies are around 1% to 2% less. All my loans personally are around 5%. So when we're playing that positive arbitrage game, like we talked about before, if you could have a cheap cost of capital and your money's remaining intact, that is very advantageous. So it's cheap debt, and then it's also flexible too. When we're talking about business owners and real estate owners, well, sometimes we have good years, sometimes we have bad years. You can let that interest rate, let that interest ride if you want to. It is advised to pay back. It does compound, but you have that flexibility. You have that control of your capital, so you can make the moves that you need to make. So that is the package of whole life, and that's why I like to use it with not only real estate but also private lending as well too. So
No, I'm excited. I think it's great, and having someone like you that knows your product is great to have on a team. And here again, going back to something we said earlier, is you got to have a team around you, and you've got to make sure that team knows what they're talking about, because just so
Mhm.
many people today, and you mentioned bigger pockets earlier. I actually posted a rant the other day about
I think I know
AI.
where this is going. But yeah, yeah, yeah. It's
And I don't
all
know if you
over,
saw
man.
that,
It's all
but
over.
I think it was something about his Claude talking to Claude. And it was somebody had posted AI, and it was so obvious. It had those little M dashes and
Yeah, you could see it. You could see it for
phrases.
sure.
Yeah, it's easy to see the bullet points and the phrases like sanity check. Who talks like that? Nobody talks
Yeah.
like sanity check. Nobody says
S-
that, but
Some
it
things that
shows
people,
up all the time. Hey, I need a sanity check on this. AI, I already know. And it's got
yeah,
the little dashes in between the mid sentence, and nobody writes like that either.
yeah,
So anyway, what I noticed was the post was obviously AI, and then I started leafing through the responses, and every single response, all they did was copy it, paste it
yeah.
into Chat GPT or Gemini or whatever. And it was like, oh my God, it's just like they're talking to themselves. And
Yeah.
I posted a rant about, gosh, can't, the social has gone onto social media. And it's sad because
Ooh,
we
that's a
met
good
on
example.
there, and I've met some wonderful people on that
Yeah.
platform. But it seems like more and more people that are reaching out to me are bots. And
Mm.
I don't know what their end game is in connecting, but I'd love to go on and say somebody was, hey, I'm having this issue and I'm not sure how to solve it. And it might be something that I've run into in my career. And I could say, hey, this is how we typically will solve it for a customer. Maybe you should look into that. Um, but yeah, I think that surrounding yourself with the right people to bring this back, that really know their stuff. We were talking about, and I listen, there's some great educators out there. We were talking about a particular educator that I'm not going to mention. And I pointed out to you something very important, that this person's all over the place, but they've never managed through a crash.
Yep.
They're teaching this Pollyanna, very risky behavior in what they teach. I mean, talking ridiculously risky, that I've seen crash in previous crashes, exactly what they're teaching. But everything they tell us Pollyanna, and their disciples, boy, they'll defend them to the die, even though you point out, hey, this is every time that this happens in a crash, y'all lose your money. So this person had never managed through a crash, which in private lending, I think is a big deal. You have to, were they in business prior to, or were they in the business prior to that last big crash? I've seen three or four of them. So being able to understand what happens when we're nearing a market like that, and how do you dial back the portfolio to be defensive in those situations so that you live to fight another day, is a very big deal. And your
Yeah.
products actually help that too.
Mhm. Let's talk about more how people can, fight through some of this friction that's going on. We talked about some of the AI issues that are going on with bigger pockets, different platforms. It can be tough to find the right people in the right locations. And financial education and literacy is not taught. I have a West Point diploma hanging up behind me. We had like a Roth IRA calculator class, but that's where our financial education ended. And that is a huge issue that I see in modern times. It's financial education literacy is not taught. You have to go seek it. You have to seek mentorship. You have to jump on different platforms and use the social aspect of social media. But that social aspect, like you said, it's kind of dying off. So if I'm someone listening to this, I'm down financial paths, maybe I'm just starting real estate, I'm looking at getting into private lending. What can I do to set myself up for success? How do I find the right people in the right location? What do I look for? What do I do? Let's talk about that person and how they could get set up in a efficient and effective manner.
Well, I just thought of an analogy that I'm going to throw out there.
Mhm.
Let's say I last weekend I watched the movie Patton with George C. Scott,
Mhm.
and absolutely loved it. That's one of my favorite movies. It wasn't last weekend. I'm making that up. I watched it years ago and love it.
Yeah.
But let's say I watched it last weekend. I'm going to teach tank warfare,
Mhm.
and I'm going to start a course on how you fight a battle with a tank. Or I can go with somebody that graduated from West Point. I
Mhm.
watched Pat, and you graduated from West Point. Who are you going to listen to when they talk about military So I
Yeah.
think the same with private lending or with what you do in your policies. You have to find people that have actually lived it and actually have a formal background in it. It can't be, and we were talking about one guru out there that, yeah, I really want to be real careful with what I say because I don't want to push anybody from the bus. But it was
Yeah.
somebody that had absolutely no business. They were in a field that had nothing to do with making money or lending or real estate or whatever. Yet they were charging people thousands of dollars to come to a hotel and see this event.
Mhm.
um, Here again, I say go back to LinkedIn. I think it's the first place I always start. If I see somebody post something, I'm going to look and see, do they know what they're talking about? I go back and I look at their resume on LinkedIn and say, gee, yeah, this person worked at this bank, this bank, this bank, and this bank. They had progressively, growing responsibility. They know what they're talking about.
Mhm.
Versus, I'll go back to your background. You went to West Point. I have no business teaching military strategy. You actually have a degree in it.
Mhm.
So does that person actually have the background? I think it's really hard to find the right people, but they're out there. Social media. I mean, look at real estate. My wife and I were talking about, and she's in real estate as well. But it seems like no longer is a real estate professional, a true professional that understands the contracts, that knows the codes, that knows all the ins and outs of the business. Now it's who can get their skirt the shortest, and their show as much
Yeah.
cleavage as
Yeah. Yeah.
possible
No, it
on
sucks.
their
We see it.
Instagram models.
Thumbnails on YouTube. Yeah, it's
Oh,
thing.
it's true. But that's who people are watching, and they're out there. They've got the followers where the pros are seemingly boring. And I was told, like I said, I was told, dumb this down.
Mhm.
It's people are reading 20 pages, and gee, this is more complex than I thought. I want to be told wonderful things about it. I don't want to be scared, the Dougie Downer or whatever. And
Mhm.
what he's talking about there, when you brought up Dougie Downer, I don't know, it was a silly idea. It's
I like
two,
it. I
three
like it.
sentences at the end of every chapter. It's how you going to lose your money if you don't pay if you don't pay
Yeah.
attention to what you do, and how you going to lose your money.
Yeah.
That was Dougie Downer. I'm gonna rain on your parade today. So I think it's really important to be able to understand the people that you're working with, who they are. Do they actually have the background to be able to teach tank warfare, or like me, did they just watch Pat and decide to start a course?
Yeah.
And unfortunately, that's what's happening out there.
Yeah.
You know,
So
and it's not just private lending; it's real estate.
yeah.
And I promised that I would not push people in front of the bus in this.
Mhm.
But I have strong thoughts on several people that I'm not going to talk about. But they go out there, they decided they were going to sell courses, and they're very successful at marketing and selling courses. But there's no meat behind what they're actually doing. There's no experience. Part of intelligence and wisdom are two different things. You can be 12 years old and super smart, but you don't know the ways of the world.
Yeah.
Where a 90-year-old person is going to have lived their life, and they know some of the pitfalls that a 12-year-old doesn't know yet. And so I think you're looking for the wisdom, you're looking for the background, you're looking for, gee, I get the idea of what you're trying to do here. However, I've seen this movie before and it doesn't end well, and here's why. This
Yeah.
has been my experience. I think that's what's most important, is not just looking who's flashy, look who's got the experience to be able to team with.
I love it.
That answer your question?
Yeah, I made a couple of videos that break down, how do you ensure that you're talking to the right person in the whole life space? How do you ensure that you have like a correct policy? Do you have a kind of like checklist or some type of process that new people could follow to ensure, at least like guide them in to make sure that they're going to be with the right players inside the private lending space? So we talked a lot about credibility, the background and everything, but do you have like maybe a one pager or a video or some type of product in the that helps address some of those questions that you should be asking?
Great question. I don't.
Mhm.
One of the things, by the time they get to us and they spend some time, okay, we get it. You're on the right team. The only time that we have people kind of take off from us is when it's
Mhm.
when they want the easy, quick buck.
Yeah.
They a lot of people, and I know it's in your space as well, they will gravitate, they will want to hear something, and they will gravitate towards what they want to hear, not the truth.
Yeah, it's like a
You know,
self fulfilling prophecy almost. Yeah.
yeah. Well, I had there's a woman that I know that was talking about how she had a friend that lost a bunch in private lending,
Hmm.
and was talking to me about it. I said, well, I'd love to talk to this person and maybe I can help them, navigate those waters a little bit. And the next time they do a deal, like I can help underwrite it. No,
Hmm.
they went and paid money for another course in a totally different field,
Hmm.
and they're going to go do, and I'm telling you what this person's going to do for money that they paid the course for is absolutely stupid. I'm
Yeah,
just going to say that it's not, but it's not in private lending. So sometimes people hear what they want to hear and they gravitate towards what seems easy. And just because it's easy doesn't mean it's the right thing to do, which is why I refuse to dumb this down.
I love it,
Not
man.
going to do it.
I
Not
love
going
it.
to do it.
Do you have any
I don't.
other?
I wish I had a magic wand other than to say go to LinkedIn.
Yeah.
Check them out. That's where I would start.
Yeah, I love it. Do you have any other kind of imparting or last word that you want to throw out, either to that avatar that we kind of constructed, that person that hasn't heard of private lending before, or maybe they are very experienced. They've been around this game for a while. They've done multiple different notes. Do you have any other type of imparting wisdom that you would like to throw out there for those people?
Oh boy. How long do we have? I've got to pick one, just one thing.
Yeah.
No, I think surrounding yourself with the right people, and thinking about if the person that's teaching you private lending and the first thing out of their mouth is collateral, they probably don't
Mm.
know what they're talking about. They really don't. So, you have to hone your craft. You have to spend the time studying and learn. Not only, hey, I'm going to go back to your West Point background. There's a reason that the United States military is successful where when they go into a campaign, it's because they really train their people and they equip their people extraordinarily well. You're going into let's say a war, and you've got F-22s versus an F-4 Phantom. On the other side, there's no contest there. The equipment, the training, everything else is more important. Is key in what they teach you at West Point. And I think it's the same in any field, whether it's real estate or private lending or notes. There's some great educators out there. And then there's some really, really bad ones. I think I told you the story about speaking at a conference, and there was a guru that brought a bunch of students to the conference, and one of them approached me after I got off stage speaking on note investing, actually, which is the other part. It's private lending and note investing is the book. And a woman approached me and said that she was there with her guru, and I spoke the next day at the same conference. And when I looked up at the back of the room, there was a line of the students sitting there, and the guru was sitting with their legal pad, writing down everything that I was having to say. I
Yeah.
didn't think it was that big of a deal, but it was a guy. When I looked back at his background, he had no business teaching what he was teaching, but he sure could sell a course on the
Yeah.
internet. You
Going back
know,
to that marketing concept, man.
Go back to the marketing, see through the marketing. That's what I'm going to say. Look through the marketing, understand that the people you're working with really have the background to be able to impart wisdom upon you, and not just somebody that puts on a flashy marketing campaign.
And add that person to your team. We'll wrap it up like this, but I'm a big fan of turnkey real estate because the ease and everything. But a
Mhm.
concept that I also really love is kind of like that turnkey access to your whole wealth building team. You should have multiple members on your team all
Mhm.
supporting you. You should have your CPA guy, your estate planner, your private lender, your real estate person, your insurance person. All those people should be working cohesively together to support you. So in the private lending space, tell us a little bit more about how we can get a hold of you. We talked about your book and everything. How else can they
Yeah.
get spun up with Castle Rock so we could add that private lender um, position to our team?
Well, I'll send you links so that you can put it in when you post this as well. There's really three websites, and the newest one is themadlender.com. Themadlender.com. It's kind of black with the electric green out there. I don't know why I came up with the Mad Lender. It just kind of came to me. It's kind of funny, I thought. But what product we offer there is actually private label underwriting for private lenders. So if you're a private lender, and most of those people don't have the ability to pull credit reports, they don't know the analysis, they don't know the cash flow tax returns properly, they don't know how to underwrite a deal truly, we actually provide that support for them. through the Mad Lender. Through Castle Mortgages by Castle Rock is the Florida-based NMLS licensed mortgage company. That's mortgagesbycastlerock.com. And then Go Castle Rock is Castle Rock Capital Management, which is I say the private equity piece, but it's more some of the private lending and note investing and some of the real estate development that we do and have done for the last 20 years. So
Very cool.
those three, themadlender.com, go-castlerock.com, and Mortgages by Castle Rock. Those are the three companies that we have. Probably the easiest way to get a hold of me.
Amazing. Very, very cool, man. Hey, that's all the time we have for today. I really appreciate this. This is social media, the good effects of social media. We met online, we have some similar values, we connected, and this is what it's all about, man. I truly do
I
love this
enjoyed it.
stuff. I love having these conversations with different people. So I really do appreciate your time. Really looking forward to the next one. And thank you so much.
I enjoyed it. Let's come back and do this again soon. Pick a topic on, tell you what, pick a chapter in a book. We'll spend the whole hour on it.
Oh, yeah. Let's do some dead
Love it.
dives. Cool, man. Awesome. Sweet.
Take care. Thanks so much.